Welcome to The Explainer. So today, we're going to unpack this massive economic experiment that has pretty much defined the last 15 years. We're going to look at how the Federal Reserve's big decision to flood the world with easy money created this whole financial reality that, well, now seems to be reaching a really dramatic turning point.
This quote just captures the feeling perfectly, right? The sense that something huge is coming to an end. But to really get how we got here, we've got to rewind. We have to go back to the beginning of the dream, the 2008 financial crisis.
Okay, so picture this. It's 2008, and the entire global financial system is teetering on the edge of a complete and total collapse. One official inside the Federal Reserve at the time said it felt like they were at the precipice of the apocalypse. No exaggeration.
So to stop the bleeding, the Fed did what it usually does. It used its main tool, cutting short-term interest rates. And they didn't just cut them. They slashed them all the way down to basically zero. But here's the thing. The economy was still flatlining. It just wasn't enough.
So they had to turn to this radical, pretty controversial tool called quantitative easing, or just QE. The idea was, simple but kind of wild. The Fed would just digitally create money to buy up bonds from banks. This flood of new cash was supposed to push down long-term interest rates, think mortgages, business loans, and get people borrowing and spending again. Like one insider said, it's almost like alchemy.
And look, this emergency measure, it worked. It stabilized the banks. But it didn't take long before it created this powerful and, frankly, dangerous new dependency.
This right here, this quickly became the new gospel on Wall Street. The Fed's seemingly endless supply of cash kicked off the longest bull run in stock market history. But a lot of people felt it was just a sugar high, an artificial boost that wasn't really connected to the health of the actual economy.
And we got to see just how addicted the market had become in 2013. The Fed chair at the time, Ben Bernanke, just suggested, he didn't even do it, he just hinted that they might slow down or taper the money printing, and the market threw a gigantic taper tantrum. Stocks plunged, and the Fed was forced to back down.
Okay, let's really dive into this for a second, because this is a huge turning point. That taper tantrum taught investors a really powerful lesson. The Fed had their back. No matter what, it seemed like the Fed would step in to save the market. This created this dangerous cycle where anytime they tried to act normal, the market would tank, and that basically forced the Fed to just keep the easy money flowing. So this decade-long experiment, well, it had some pretty profound side effects. It basically created two completely different economic realities in America.
In this policy, it just created this stark contrast. While Wall Street was having this historic party with record profits, the reality for a lot of ordinary Americans was just slow, painful wage growth. And that disparity, it fueled this enormous political anger and this widespread feeling that the whole system was just rigged.
And you can see that disconnect perfectly in what big companies did with all that cheap money. Instead of, say, investing in new factories or giving workers a raise, they bought back over $6 trillion of their own stock. And what does that do? It artificially boosts share prices and, surprise, surprise, executive bonuses.
As Nobel-winning economist Joseph Stiglitz put it, QE was basically just trickle-down economics that put wealth inequality on steroids. The benefits just flowed overwhelmingly to the people who already owned assets, which just widened the gap between the rich and, well, everybody else.
And then 2020 happened. The COVID-19 pandemic hit, and that easy money experiment, it didn't just continue, it went into absolute overdrive.
The response from the Fed and the government was, well, there was no precedent for it. As one person put it, it was bazooka, cannons, and tanks all at once. They flooded every single corner of the financial system with trillions of dollars, and they did it in just a matter of weeks.
So what happens when that much money is sloshing around and the Fed is basically promising it'll backstop everything? People started gambling on anything and everything. GameStop, Bitcoin, NFTs, you name it. It felt like a no-lose casino because why not? The Fed would never let the party end, right?
Well, every party has a hangover. And this massive overdose of stimulus, combined with all the pandemic supply chain chaos, it led to this inevitable, really painful consequence: soaring inflation.
For months, the Fed and its chairman, Jerome Powell, kept saying that rising prices were just transitory, a temporary blip that would just fade away. But as inflation hit 40-year highs and it started crushing the poorest families the hardest, they had to admit they'd made a massive miscalculation.
And that led to this stunning, historic reversal. At the annual Big Banker Summit in Jackson Hole, Fed Chair Jerome Powell gave this really short 8-minute speech with one
crystal clear message. The Fed was now going to slam on the economic brakes to fight inflation, and it was going to hurt.
He made it absolutely clear. The unfortunate, but in his view, necessary cost of getting inflation down was going to be pain.
Pain for households, facing much higher borrowing costs.
And pain for businesses facing a major slowdown. After more than a decade, the age of easy money was officially over.
And the Fed's new war on inflation triggered these immediate shocks all across the very economy it had spent years propping up. Interest rates shot up faster than they had in 40 years. Markets tumbled. Crypto just imploded. And the housing market ground to a halt.
And that brings us to today. The Federal Reserve is now using the hammer of high interest rates to try and fix the very problems its own policies helped create. And it leaves all of us kind of wondering, how stable is a financial system that was built on a foundation of easy money?